What is the best moving average? Ooh, wouldn't you like to know? Because there are so many. There is the SMA, the EMA. Man, I have a bunch of them here that we're going to test. So if you recall last time, we were using a moving average crossover strategy, and we found that, spoilers, it didn't work very well. So this time I thought, let's just go through everything that we can think of with moving averages, see what we can find. So I'm testing a couple of exotic moving averages like the HMA and Super Smoother, which, don't want to ruin it, but I found some interesting things. Not necessarily anything that's going to make you profitable on its own, but definitely some good information, things that most retail traders don't know and will make you think twice about how you use a moving average. So without any further ado, let's get into it. And yes, I am Speculator Seth. I stream my live trading session every day from 8:20 to 10:30 Eastern Time. I trade the S&P 500 futures and the Treasury futures. It's always a good time, so stop in and say hi. Okay, so I've got some code here up on the screen, and it's really simple code. So for today, I want to keep all of the code really simple because I want it to be indicative of how moving averages were intended to be used or are used by retail traders. Nothing too fancy. So just when you get here into the code, the first one that I want to test is, are we above or below the moving average? So if we close above the moving average, then we will go long. And if we close below, then we will go short. And entries are exits. So here are the stats for a simple moving average. And I want to point out one really important thing, and that is that the percent profitable is not very high. So we're only getting about 25% of trades end up as a winner in this situation. And that is because moving averages are really good at catching runners. So you can catch a good trend. If you catch a trend, then you make almost twice as much as you lose. But in this case, the win rate is just not enough to make it profitable. So we have a profit factor of 0.77. I think this is really counter to what most retail traders think about moving averages, because we typically think, I want to be in line with the trend. I will have a better chance of winning if I trade with the trend. And the problem is that when the trend changes, it's not really very indicative of whether the trend is going to continue or not. But you can detect the start of a trend, and if you get in at the start of a trend, you can get really good winners with it. The next one that I want to show you is the EMA. So the EMA is going to be a little bit faster than the SMA. So the idea here is that because it's an average, it slows you down. That's why the indicator lags. So let's weight more recent prices more strongly, and that should make the moving average faster. But what we find here is that it doesn't make you more profitable in this case with the EMA. And you're going to find this a lot with moving average strategies like this, is that the big hurdle is saying that we've really crossed the threshold. There's a real threshold problem where that area where they cross over and you can say, okay, now I want to buy. They like to go over that over and over and over again. And so you get a lot of losing trades and not a lot of those runners that you're really looking to catch. And this is even more strongly showed when I go here and I switch things over to second bars. So the way that we were doing things before, we need a close above the moving average to enter into a position. But it might do that, go back and forth multiple times within a single bar. So what I've done here is I've gone over to second charts, and instead of using a 10 period SMA, I'm using a 600 period of SMA. So it's essentially the same moving average, as just on a finer granularity. And you can see here that because you get faked out so often, this actually does worse. So the next strategy that I want to look at is just using the slope of the moving average. So that we're looking for that inflection point where it turns positive or negative or whatever it is, instead of waiting for a price to actually cross the moving average. And this inflection point is typically going to be several bars before, so you're actually going to get in quite a bit earlier with this strategy. And you can see right away that with the simple moving average, it works better if you use the slope instead of the crossing of the price. But I actually found some moving averages that performed even better than that. So this one is the HMA, and HMA really follows price quite closely and is extremely responsive. I know that a lot of algos tend to use HMAs, and you can see why it is a little bit better, especially on those small time frames, than the SMA. Another one that I really like to use here, the Super Smoother, that was the best performing. Still not quite to break even. The commissions still kill it, but the Super Smoother on a seconds chart was actually the best performer out of these simple moving average strategies that I tested, which is kind of interesting because the Super Smoother is supposed to be similar to an audio filter in the way that it filters out noise. The supposed benefit of using an indicator like this is that it gets rid of quantization effects, which is like, the close of a bar. It could be a different price if you just moved it over by a second, and the Super Smoother somehow is able to kind of get out that noise. And the fact that it works better than all of the other indicators, and particularly on the seconds bars instead of the minutes bars, maybe suggests that a lot of that is true. So I took all of my results and put them into a spreadsheet here so that you can see. Again, it was that Super Smoother on seconds charts that worked the best, and then the HMA on second charts. And then the next winner up was the slope on the simple moving average, which is interesting. The simple moving average was one of the best ones. One theory for this could be that the moving average is kind of a self-fulfilling prophecy, because the simple moving average is going to be the most popular. It ends up being one of the most effective. Just a theory, but something to keep in mind with all technical analysis, that there is definitely a self-fulfilling aspect to them. The more popular it is, the better that it does, but then that also attracts sharks, and so ultimately you can't really derive a whole lot of edge out of it, but it can kind of get you to break even, and that's what you're seeing here. Some of these actually are slightly profitable if you don't factor in commissions, but it's not enough to pay for the commissions. And by the way, I want to just point out that there's a lot of things that I tried that I didn't necessarily include in the video, especially dealing with different ways of taking your profits. So here I just tried to, take set profits and targets, and you can see it's still, it helps it a little bit, but overall, the general thing that you get is that the probability on them just isn't very good, and that the real benefit to a moving average is that it can indicate to you the start of a new trend. So the next thing that I want to talk about is daily moving averages, because that 50-day moving average sure is popular, especially recently. I've seen a lot of videos on TikTok and so forth that are like, oh no, we just fell below the 50-day moving average. We need to sell everything. Well, okay, let's back test it and let me show you why it's a little bit more complicated than that. So first, here is the code. It's pretty similar to what we were doing before. If we close above the moving average, then we go long. And if we close below the moving average, then we go short. Now, I actually found in this strategy that the longs worked and the shorts didn't. So I got rid of the shorts and I just had it exit when you close below the moving average, and that seemed to work best. It actually did make more money than if you were just long the whole period. But it's really interesting the way that it behaves when you go below the 50-day moving average. It's really not a good short. It actually is really likely to chop around that 50-day moving average a lot. And hey, that is almost exactly what you've seen here in the later half of 2020 when we started dipping below that 50-day moving average again. It's like they're fighting over it almost every day, it seems like. Another interesting thing that I want to point out again is that moving averages catch the beginning of trends, but they don't necessarily have a good win rate. And even here on a daily basis, we were getting 37%, even on the starting to go long. You get a lot of false signals. So especially if you're a day trader, whether we are above or below that 50-day moving average, I would think twice about how you use that and reading too much into it. However, it is definitely an area of interest and would absolutely make a great place for scalping. Okay, now the last one that I want to talk about is the VWAP Bounce. So I have two scripts here. One is for a bounce here. I'm actually doing a couple of extra things here to kind of give it a little bit of like it's sure that it has touched the VWAP. And I have this other one where it does the opposite, that if we touch the VWAP, it assumes that it's going to just keep going. So here are the stats for a VWAP bounce. And as you see here, 54, almost 55% profitable, which is pretty good. I mean, anything even close to 50% is usually pretty good because the odds are stacked against you because of the spread. But yeah, 55% is really good. In this instance, we aren't making enough from our winners compared to what we're losing on our losers for it to work out. But it definitely makes sense why a lot of people look for that VWAP bounce. On the other hand, I did it the other way, where if we just continue through, and you can see here, of course, the long trades always work better. And here in this case, even though it's a meager 15%, those winners are so much larger than the losers that it actually makes sense to try just going through the VWAP a lot, because when you get that reversal, it works really, really well. But I think that there's another takeaway from this, and that is that when we continue through, you can get really good trends. And so I have found that the VWAP in particular makes a really good filter in automated trading strategies. So I will always go in there and add to my conditions, only go long if I'm above the VWAP and only go short if I'm below the VWAP. And that almost always increases the profitability of my strategy by about 5 to 10%. So again, VWAP, really good thing to look at, really good thing to use. But maybe some of the ways that we typically use it, it doesn't look like just with the most straightforward methods that we have that it is profitable. But of course, as with any of these strategies, there's probably some things that you could do to adjust it, including how you take your profits and adding some other conditions to try and make the percent profitable better that might make it work better. So let me know if you have any ideas. Is there a moving average that I missed that you would like to see included? Or are there other indicators that you guys would like to see me go through? I'm thinking about doing the Bollinger Bands. Yes, Bollinger Bands next. But hey, let me know, what would you like me to back test? Well, I will see you guys when I'm streaming in the morning. And in the meantime, stay profitable, friends.